Morning everyone, it's freaking freezing over here. Where's the snow? It really needs to be snowing for this sort of weather. So today I'm going to talk a little bit about inflation and deflation. Oh my lord. I sort of found myself in a... Now the main reason for this video is I want to talk about inflation versus deflation, or deflation. And because there's a lot of confusion around inflation and deflation. Whenever you see it in the newspapers, they don't really have a clue. They confuse them because you have two types of inflation and deflation. You have monetary inflation and deflation, and you have price inflation and deflation. So first of all, price inflation and deflation is, I'm just going to say one of them instead of two of them. So first of all, when you have price inflation, what that means is that the prices of stuff is going up, or price deflation means prices are going down. So what we've had over the last sort of 10 years or so, or probably even more, or in fact definitely more, is that we've had price inflation. In fact, we've had massive price inflation. Pretty much everything you can think of is now more expensive than it was. Look at Quality Street boxes, any chocolate bar, any packet of crisps, pretty much anything. Snickers bars, definitely. So everything has been getting more and more expensive, other than silver, but that's a whole other topic. And what we've, and so we haven't really seen any price deflation for a while. And what we're seeing at the moment in the newspapers are, oh, inflation's at 0%, or we're almost seeing deflation. Well, it's absolute bollocks. There's far more to it than that. So over the last 10 years especially, we've had, at the same time as price inflation, we've had monetary inflation. So the central banks around the world have been printing like absolute crazy. So what monetary inflation is an expansion of the currency supply. And so we've had monetary and price inflation. Oh, there's Coco. Hello. So we've had inflation of both sorts. But what we're having now is a really interesting scenario, because even though real inflation, i.e. price inflation, is still going up, we're having the little sniffs of monetary deflation. The currency supply is trying to contract, and that's why we're having all these things like QE. And so we're in the sort of a limbo zone at the moment, and no one really knows what's happening, what they're going to do, because even though price inflation is still going up slightly, we're having oil tumble. I mean, oil, it wouldn't surprise me if it hit $25 a barrel. And because everything in the whole world is measured or in dollars and oil pretty much, surely that should mean that prices for stuff should be going down. But it isn't. Yes, the petrol prices at the pump is still, well, it's way more expensive than it should. I mean, we're the most expensive, we pay the most expensive petrol and diesel in the world, or we go first and second with Norway. But so even though petrol prices are down slightly, everything else is still going up. And that doesn't make sense. If oil is going down, everything else should be coming down. But don't forget, at the same time, we've got lowering interest rates and QE in various parts of the world. So we're in a bit of a quagmire, because we've got these two things which haven't really existed in any recent history. So that's monetary inflation and price inflation. And the only reason oil is going down is not due to real market forces, it's just due to Saudi and the oil players. I mean, Saudi is just trying to regain market share, it's trying to make everyone go bust, just so, oh my God, sorry, that sounds quite right. It's just trying to regain market share. That's all it's doing, really. So I'll just walk this way away from the sun. So that's that. So what's going to happen? I don't really know. Obviously, Saudi can't suppress the oil prices for so long, because they're now having to take on massive loans and extra debts just to balance their national budget. And even though they're the big boys, they still need at least anywhere between $90 to $104 a barrel to balance their national budget. So they can't keep that up for long. And also, what I see happening is we can have another sniff of monetary deflation, i.e. the currency supply contracting slightly. And the reason we're going to have that is because lots of people are starting to pay down their debts. We're falling into what we call a liquidity trap. So there's a good book called The Holy Grail of Macroeconomics by Richard Koo, and he really dissects what happened in Japan. And what happened in Japan is that everyone, one of the reasons why Japan has been in a 25-year depression is because, they're in exactly the same situation as we're in, as in huge global, huge debts, huge property market, massive banking sector, and they still went tits up. And what the Japanese did is exactly what we're doing now. They thought, oh, we got a liquidity problem, so let's just pump loads of QE into the market. But that didn't happen. And so the Japanese currency supply contracted because all these big companies, they're technically insolvent, so but they had good cash flow. All these massive, Japanese technology companies. So what they're doing is they're taking the cash flow and they're just massively paying down debt. And average homeowners in Japan were doing exactly the same thing. So more QE didn't really get anywhere out of any problem, really. And we're following in the same footsteps. So right now, people are trying to pay down debts. We're going to have a sniff of monetary deflation. And so that's why it's only a matter of time before the Federal Reserve starts QE again. And then, they're going to continue that race to debase, i.e. a race to the bottom to see who prints last, because you lose if you print last, basically. So I see what, and going back to the markets, what I see happening is that the markets will fall even further. We're on a big support level right now, and yes, there may be a bit of a pullback, but once we really go below and close below that support level, it really is game over. We're not going to see any more highs like we did in April last year. We'll see a massive fall over, and then we'll see massive QE. So we'll have a massive rebound, and then we may, over the next few years, see hyperinflation in some places. I would not be surprised if we saw hyperinflation in Japan. So that's just my ramblings for the day. Hope it helps, and have a good weekend. Cheers, bye bye.